All right, I'm gonna do a video on some TA with Clover Health. I got three charts with Clover Health on it because each one, there's a lot of information on here, but you just can't. You got to work the information. You got to massage it. It all has to cooperate together. You got to be able to read it, and it's got to be a lot of it, right? So it's pretty much what I like to do. I like to combine a lot of data together, right? Especially when it comes to charts and shit. It's one of the funnest things on the computer for me to do anyway. All right, start off over here on the weekly chart. Well, that's the 3 day. Let's start off on the 3 day. Okay, so these signals right here, these are whale buy and sell orders. Um, this indicator likes to catch it when it's designed to do that whenever it happens. So on the weekly, you can't really see any action going on, but on the 3 day, you can. So on 3 day, you have this area right here, which is if you try to find the center of it, you're looking at around $2.70. The top part of it will probably be around $2.80. So that's pretty much when it had this. No, not really. So afterwards, took it all back too. I think I was a stop loss hunt, but so yeah, this was the key area was right underneath that level, right? So that's where there was a lot of buying going on there, according to this indicator right here, right? And you can see on the daily we haven't had anything. I got the candlestick coloring for contrarian mode, so you'll see reds tops and greens bottoms, um, and the typical color it has is going to be this purplish color, right? You can see in the background over here we got a couple of them layered on top of one another, but typically within this zone is a buy zone. There's probably no volume right here, which is around $3.40. Then there's somewhat here, but it kind of fades into one another. So I would say the support zone would be around $2.80 all the way to $2.60. Um, there was, we had this like cascade waterfall off over here, so there was a lot of selling going on right there. Um, when we look at the order book, which is defined by this line right here, you can tell that the selling cascades up, right? So which means there isn't too much there to hold it, right? When it goes sideways, kind of like when you see this one is in inverse, the dailies, 3 day. Let's go to the weekly instead. So and then I'll talk about this too, this like rising wedge, right? And then if we look at it here, you can see on the weekly, like there's a lot of strength, in the supply zone right here, right? Which on the daily it says there's strength. Then on the weekly it just drops off, just like it gives up. There isn't none, right? But on the daily, it's all right here around $3.10. You can see the weekly has selling pressure to it, but it is in an upward slope, right? So, you know, it does say it wants to go up. It does say it wants to go up. It does say it wants to go up. You can see the yellow bars turn blue. This one reacts quicker than this one does, right? And then I have psychoanalysis on here, right here. You can see this one, and then my wave analysis. Um, and then over here on the volume, I was looking at this at one point in time, how we had like this diamond bottom form here and here, right? And that was around the same area. If we look at the weekly, right here, when this signal went off, and right here when this signal went off, and it came to a conclusion. We've seen an upward move, right, from 60 cents to damn near $5. Um, it hasn't done that all the time, but right, you know, let's see here. but it always had some type of rising move, you know, probably like the last quarter of the indicator left. We chop it up into quarters, right? One, two, three, four. I would say the last quarter of it, it has to move up, right? Because the selling was dramatic. And you can see where you have this blue line going right here and right there. That was a divergence, which means the indicator kept on making higher highs and higher lows, but the price actually kept on going lower lows and lower highs. Right? And you can see the same thing right here with daily, where it had it's pretty much just one giant divergence from here. At was it $1, $3 and say $3.50, all the way down to $2, right? So this whole thing was just like one giant divergence. As the price was going down, the indicator was making higher highs and higher lows. The price was making lower lows and lower highs. So this is a good point. Taking in all this information that we have here, right? It going into positive now. Right here, the money flow is going into positive territory from red to positive. Like it's been in this negative money flow area since I would say right there, March, the beginning of March. Yeah, it ended. Well, the positive money flow ended in February, but the negative money flow started in March. And we've been going through that whole scenario up until now. So now we're going to see some kind of relief or some type of move up. We got divergence right here. You can see it right there. Now this is what I'm looking at. Looking at this rising wedge right here, right? It's because it keeps on making higher lows, and eventually, as it slams into this one over and over and over and over and over again, the more times it touches it, the higher the likelihood it's going to break through it, right? So I'm thinking we should break through it sometime before this year is over. We're in the fear area right there, which typically, you buy low, you sell high, right? So that's a good thing. But like I said before, um, these signals they usually have a double bottom like scenario, right? They usually go up, then they get relief, then they go up, which is technically down on the chart. So it goes down, right? Then it goes sideways, consolidates, and it goes down again. So like right here, um, it went down throughout its whole move, and right here it consolidated, then it dropped again to that one. Like right here at the 60 cents level did the same thing. Went down to about this price range, which is around 78 cents. And it had 78 cents, had a doji, another tiny doji, and then it came up. You got the red one in there too. That's significant. So without the red one there, it wouldn't be that big of a deal. I mean, it did happen. It's just not backed by the additional, the banker and the institutional ownership. Side by side, right? So those two together. Um, you see that, then you see the stochastics, moving up, right? So there's a lot of positive things going on. The cycle analysis said that that's where the timing low was for the trough, right? For the next cycle. You got the right-handed cycle, left-handed cycle, right? So the left-handed cycle, it's going to start off high and it's going to make lower lows. Right-handed cycle is going to start off low, it's going to make higher highs. So I believe we're going to be in a right-handed cycle, right-handed translation coming up with this area right here, which was at around August the 4th. That was that $2 level or something, right? So I believe we're going into a positive phase now. We see the top, we had consolidation, right? And now we're going for the next breakout. if my psychoanalysis and wave analysis is correct, right? So let me show it to you. So, like right here, as this one was going up, right, it created a top. Even though the overall trend is down, it's still within this area right here, right? You see the top of this cycle and then this one. This is the minor cycle. That's the dominant cycle. So the wave up, right, and then down. So we'll follow the wave now, and then let's, you know, keep it on the price action. Down, right? Then it hits the trough, right? Then eventually, about right here, after these signals play out, because you have this divergence here, right? Started going up. So right there, within this top, then down, and then up, and then down, and then starting to go to its upward phase, right? Now, upward phase doesn't mean it's going to go to $100 per share. Doesn't mean it's going to $10. It just means that the likelihood for it to go down isn't there. You know, even though it can, depending on whatever happens, maybe the market crashes or whatever, but it can. But just on the cycle analysis and the wave analysis, that it's setting up for its move to the upside. And then, you know, we are in this upward trend right here. You can see this white line, right? And then you can see we're making higher highs and higher lows. We haven't made a higher low yet, but we made a higher high yet, but we made a higher low right here, right? Because previously this was the low on the weekly, right? So within the trough area, that's going to be the most important part for me, anyways. That's what I'm looking at. So yeah, and then there's other indicators on here. You know, like when you see this white air space area right here, you see it right here too. Then every once in a while you see a red one. That's adding more, um, that's adding more confidence to a bottom like phase, right? To an end of a trough or to a bottom, right? So the more evidence it's on the chart saying that, because I'm bottom and tops guy. And I'm a psychoanalysis. I'm a technical analysis. I'm a wave analysis. You know, I'm that guy, right? So, looking at it like that, when you get it, when you get this, but it means more on the higher time frame. So, it's just good to keep an eye on. It's still good information, period. Um, and then you got the overall market. It's kind of like right here. There's a heat map for the overall market. It's just red in the background. Not this line red, but it's just the red faded in the background right there. Um, so yeah, we're setting up for what I believe a good move up. Now, if we look at some support areas, some resistance areas, right? We have a strong resistance at, I would say, $4. We have the higher time frame over here on the weekly. Right there's the center of it, which is around 350. But the top, if you tie in this and this, probably would get around there, right? The top of this and the bottom of that, this indicator, which just says the point of control is right here at $4. So then that's going to be a strong resistance point. So anything between 350 to $4 is pretty much just like a strong resistance fucking, bar area zone, right? Um, then if we look at the projections for the move right here, this white line and this yellow line, it says we could reach maybe $5 and $5, $3.60, and then consolidate within this in this zone right here. Um, and then that would be around $3.30. So we're at $3.30 to $3.50. If we can't break $3.50 to consolidate between $3.30, $3.50, and we break most likely the 10 moving out, the simple moving average, 10-day simple moving average. And we break that, then this could play out right here. And we'll retest support right there, 3 and 10, and see what happens. Maybe that'll be the consolidating range between $3.10, $3.50 until we have a breakout. But from what I'm looking at, it all looks good. It all looks like it wants to go that direction, even though there's some strong resistance there. It looks like that's the direction it's heading into. Now, with all this information, it's still, to me, it's limited information. That's the reason why I got three graphs. Because I can't really clutter them all up together. Because if I do that, then it's gonna, even for me, it's gonna be unreadable. So I have to cut it up into three parts, right? So there's 33.33% there, 33.33% here, and 33.33% there. Um, let's see. So yeah, it looks like we're consolidating, and we should see that move up. Test $3.50, maybe consolidate for $3.50, $3.30 before breaking $3.50. Then test that level of $3. I mean $4. Now that's going to be the real big one. We can break $4, then then that's it. Then we hold $4 as support, and we're going to be looking forward from there. Um, like I said, also there's weak supply on the daily, but there's strong supply on the weekly. So that makes me think if we're going to do this, we're going to have to do it quick. The longer we wait, the longer we hit a top, you know, um, we're going to build strength, but we need to see the supply become less and less as time goes on. So, but the more times you hit a support area, whether it be support or resistance, the higher the likelihood you're going to break it, right? So we don't want to come back down over here. We want to keep on slamming up against that $5 range. Boom, boom, boom. Just keep on hitting that wall. Wham, wham, wham. Eventually, more times we slam up against that motherfucker, we're gonna break through that bitch. So we don't want to slam down over here in the $2 range no more. We want to keep that $3 range up and just consolidate, keep on moving up. But one more thing. Typically, after we have like this type of buying um, going on here and here and here and here, right? It tends to consolidate, but still move up. I haven't back tested it yet, but at least around 2 to 3 months, maybe four if we're lucky, but at least 2 months. And we should see some type of upward move after having this signal play out um, on the weekly. Also with the cycles, it's all moving up. We're in an upward trend on the weekly, right? Upward trend on the daily. So, that makes sense, right? Like this indicator showing up. As long as it's above, um, as long as it's above the center line, it's still trending up. It's only when it breaks below that center line right here, it's no longer trending anymore. It's like a trend indicator right there, right? All right, let's move on to the next chart. All right, this one's got volume, a CVD volume right here on the bottom. It also has the CVD right here displayed on the top. I'm on the weekly chart. This one has the same thing. Where's that? Damn, it's way down there. Okay, right here the volume, way over here. But typically, you want to see the volume go down when the price is going down, and see the volume increase when the price is increasing, right? Let's see here. Yeah. So there was something that I was looking at on the daily and seeing if it was true or false, right? So you got this big spike of volume here and here, right? And you had this indicator set off here, and it showed a buy signal there, and then it had weakness, and then to the downside it was consolidating, then buy signal, right? You had a This one moves quicker. You had a buy signal before then. This one you had it at the same time. Okay, so those green dots there. Then that's that divergence that we were talking about from last time. Now this indicator is following a different formula than the previous one that looked like it, and saying that we should come to a conclusion of consolidating somewhere in the center, 20th, give or take, in October. Um, maybe, that's just another resource, but I'm holding the other one as a higher conviction than I'm holding this one. But yeah, like I was saying, this volume spike here, right? And this volume spike here. And adding in all the other information, right? Was that a good add to position zone? Now I have, let's, dang it, let's do this. Let's unlock this. We'll use this as a guide. So right here, right? And we look at that. That was here. It turned green. The candlesticks, contrary in mode green means good area to add a position, right? We are in this buying opportunity. How we are here on the weekly, we are pretty much within the red and the blue, and the red's greater than the blue, which is a significant, difference compared to all the rest of these opportunities, right? This one, it means more. Just like how it was here, and then here was probably the same way there, but you didn't have too much of a, like this was going up. It wasn't even in at a bottoming zone, but we'll look at that in a minute. But yeah, right here was, you could have got, if I would have bought this candle, I would have got it for the low high. We'll say close at $2.26. Which is good, right? It ain't the absolute bottom, but hey, it works. Um, so let's look at that. That was a spike there. Now let's move it to this other one here. I mean, this one spiked too, but it ain't as large as that one. Let's see what that one looks like, which was around, that candlestick was closed at $2.70. And we said it was, the other spike was here. Move it over right there. And the close on that candlestick was actually more. So yeah, yeah. Even though it was, you know, it looks like it was lower because it was in a downtrend. Still, this one here, which we gotta move it again to see it. This one here, which is pretty fucking massive. God damn. Right there is like one of the biggest volume candlesticks, volume, markers that we have. So that on the daily, then the next runner up, which was this one right here, right? Which was that what was it? Was close at $2.26, right? So I mean that's good. You would have got in under $3, you'd be in the green. And you got this divergence, just like on the other chart. It's a little bit cleaner here. Sometimes I make them, a little bit cleaner, a little bit more efficient. But eventually, the goal is to make it as efficient and as clean as possible, but still getting all the necessary data. So if I can train my eyes and my brain to see the other indicators when they're not there, because I know the patterns they have just by, like muscle memory, like crystallized intelligence, right? Um, from viewing it over and over and over and again, and just running through the scenarios again and again and again, then could eventually eliminate the indicators and still like mentally have a picture of what they would look like if they were there. So that's another goal because I'm a visual learner and that's one of my superpowers. Um, so being said, that's what we would look for. We would combine this with that, right, and then we would add the weekly into it and try to narrow into a to a focus point, right, and pick that one. So we can look at the weekly. It has the same scenario going on here where it had that volume spike right there on the downward side and had this volume spike on the downward side. And they were both within this area, so you could have made two purchases. You could have made well. There's another thing too that I created. It's not really that big of a deal, but to me it makes sense. Now there's a moving average in this volume right here, right? See this moving average, this orange line? So typically this moving average sees uh, this as a high zone and this is a low zone, or vice versa. I mean, this would be the low zone because I'm looking at it from a different angle. So this would be the low zone, this would be the high zone. And when it hits this purple area, simultaneously with that, it being here and with the candles or the volume sticks, right? With other information, if you want to combine it all together, condense it all together, you can. So, you can add that, the green signal, the buy signal there, starting to go in an upper trend. It flipped green here, right? You had the moving average, touch this zone right here. There was a spike right there, right? Where's it at? No, there wasn't a spike right there. Let's say closest thing to that would be here, but that would be one. And then and this one's a little bit different. This is a higher time frame. So basically, what you want to do is you want to see the colors start to fade into dark, right? That's when the volume is dropping. This is the volume picking up. So once the colors start fading into this dark color instead of this lighter gray, darker gray, that would be a good time as long as you have the signals there, right? So you want to combine them all together simultaneously. So you get a darker candle, get a small dark one, right? Which would be like right here. And that signal within this signal, right? It rolling over, turning green eventually it did. But we jumped, we went ahead and did it beforehand, right? We're not waiting for confirmation. We're gonna do it on the way down. We're gonna think like an institution. Retail traders wait for confirmation and they buy the move up. Institutional, you know, traders or investors, they do it on the way down. You know, they do it on the way down. So that's what we're doing. It's all about bottoms and tops. It's all about cycle math. It's all about waves. It's all about technical analysis. It's all about support and resistance. It's all about this kind of stuff right here, right? It's all about finding patterns. It's all about creating a plan, implementing a plan, following through. It's all about market structure. It's all about green candles, red candles, right? That's what it's about, right? So it's all about reading the institutional buy orders, right? It's all about reading the charts. Um, so let me see here. Turn the music back on. So yeah, we got it on contrarian mode. So green means buy, red means sell. You got these little T's right here. These are tests. Test on the upside is trying to break out and it failed and it went down, right? And test. We have any green ones? Yeah, right here. Test on the downside right, to break out, and it failed because it went up, right? So those green tests or support, those red T's are resistance level tests. So that's the area of data. There's data right there, you know. Um, CBD, right? It's trending down. There's a data point, but it recently popped up right here. It went above the fucking trend line. That's a good sign. That means healing is happening. It's getting ready to start moving to the upside, right? Not necessarily it will do it automatically. If this trend following indicator right here, where it turns here and here, we still are in an upward trend on the daily. Um, the forecast says we can consolidate in between. We'll say try to look for a happy medium. It's around $3.30, right, up to $3.50, which the other chart kind of said the same thing, but this one's more at a higher slope. The other one just rolls over. This one just says that we could just chop up all the way, right? Just up, down, up, down, up, down, which is following the routine that it currently has. Up, down, up, down, up, down, up, down. That's what it's suggesting. The pattern, not so much where the price is going to be, but the pattern itself on how it's moving is with this trend. Combine those two together, you can visualize in your brain, how it would look, and it would look something like this, right? And it would probably find, like I said, strong. There's a strong resistance at $4. Let's look at the weekly chart over here. Now I have this other indicator up where these green and red bars are at. This is like it filters out all the small purchases and just brings in the large purchasing, right? So it's doing. I got it set at $8,000 per purchase, whether it be buys or sells, which is probably too high for Clover Health, but that's where I got it set up at. So like this area interest, which is at $3.50, and if we could have a moving average on here, that would be awesome. To see it. The same thing goes for this side. It's kind of like how we had the volume bars over here. Right? Where's that? Like I had that moving average right here. But yeah, there's a clutter here at $3.60. And you got one spike here, but I think the clutter is more important. So this clutter right here, so there's a lot of supply at. We'll come over here, look for clutters at this high price. Can't see too much, but there's a little bit of a clutter there. That's going to be at $3 level, right? So you say, there you go. There's some evidence. $3, you know, 360 or whatever. It's basically $3.50 range. All right. So we have the caustics, we have the CBD all sloping in an upward direction. Even the forecast is in the upward direction on the weekly. All right, that's pretty fucking good. Right? So, but once we break this order block right here, and claim it as support, which is going to be around the $4 range, and you see all these T's, these tests. We got to own that shit. It doesn't need to be green, so we got to get above that. And that's the $4 range. So yeah, it's always coming back to the 350 $4, 350 $4, right? Support. Right, on the weekly, there's really nothing to look at for support. On the daily, it's going to be right here at $3. Where it cluttered up also. We got an order block right here. It's at 2%, right? But that's where it's at. You can see also take this back. Okay. Pretty much like a there was a void right here with volume where it didn't do positive or negative. That's pretty much where we're at. Strong resistance on the daily right here, which syncs up with the actual top. It's at $4.50. So it's like, and I noticed this shit when I was on Bookmap, right? There was buys and sell orders every dollar and every 50 cents level. So like 6 to 7 to 8 to 9 and 50 cents in between that. It was like it was a pattern. It was a rhythm. So that's just something else I have to pay attention to. But yeah, on this one, we look at the CBD. It wants to roll over. It hasn't done it yet. It done it on the daily. It hasn't done it on the weekly. But we are in a upward trend, an upward channel right here. Right, we are in upward movement. We're upward. We just had this bottoming zone right here. Right, so we should have this next wave on the weekly coming up. Right now, we on the daily. We're still on a downward wave. We're about to start to turn over though, pretty soon. As soon as we start seeing these indicators flip, right? They're gonna sync up with the weekly. It's gonna be powerful when that happens. Um, and then also when this selling uh, money flow out dissipates and starts turning green like it was right here, it's gonna be powerful. What else can we see on here? Downward, we're in this downward wave. Money flow is turning green, it's like the last chart. CBD starting to turn green. We are in an upward channel, this upward trend right here. With this also, this other one here, upward. Yep. I think that does it with this one. We're just waiting for this to flip upward, really start making some bets then. But you can see how this wave works. It goes, up, down, and then that down was consolidation, right? And then it drops off a fucking this slope, but this one says it was down. It was consolidating down right there, and it drops off the fucking, you know, cascades down, waterfalls down. Right, it comes to a conclusion right here, flips. You had a signal also there. It just wasn't as important as these ones here or this one here. So goes up, down, up, down, up, down, up. Now we're working on the way down. We should start seeing some type of upward movement sometime in October, like the big shit, the weekly shit that ties into the daily shit. Okay, now that we've done that, let's go to the third chart and the final chart. Now, some of the indicators are going to roll over onto the other charts, but not all of them. Just the important ones, right? Like the trend. Um, like this, it's an upward trend, right? And also, that's the 3 day. So let's move it to the weekly. I think there was a reason why I didn't want the weekly on though. For some reason these got moved. There we go. Okay. Oh yeah, that's because of this. It's hard to see it on the weekly. But we'll start off with the weekly and then we'll fall back to the 3 day. Um we need to do something here. That's okay. Okay. All right, so this one right here is like Fibonacci's, except it uses a different formula. But it's basically Fibonacci's. Fibonacci levels, right? So if we look at it, the circles here, the white, blue, light blue, green, yellow, orange, red, and the purple. You can see how it made it all the way down to this 13th one right here, and then it bounced off of it, right? So that was a bottom area on a Fibonacci level. Time, it's using time as well. It's level and time together. Um, and interesting thing is that the top of it ties into this level right here, $10. Now that's where I expect us to how we hit that $5 top. I expect us to hit a $10 top next time, and then retrace back. I don't know if we're going to take it all the way back to five. Hopefully not, or four. I mean, hopefully not. But we should have another retracement going through before the next move up. And I think the next move is going to be this gap right here, and it's going to send us up to 15. So it's going to be like 5, 10, 15, right? That's the way I see it. I'm interpreting the data. So yeah. So this line in the background right here, this is an indicator that scales active day tradings. You know, the higher it gets over here, which is day traders more active in the stock, rather than over here, day traders are inactive in the stock. So when it turns white, rather than down, it's color coded. When it turns white, like right here, day traders are not interested in trading it, right? Now, wouldn't that make sense to within that time frame to want to buy in or to because it's not really you're not making deals with day traders. You're making deals with you know investors. So no one's trading it, then they would be buying it to hold it, right? The bag holders and investors. They're me and you, right? So at least that's what it's designed to do. Now it doesn't always work out that way. I took a look at it. I kind of back tested it on Clover Health. It works out if the this would be the last confirmation that you would want, right? That's how it works out. But nevertheless, so that's what we got going on here. And then of course I have this. I'm not going to explain that again. Already did that. We'll explain the ones that we haven't seen yet, right? Now I got a double layer um, with how the money flow is on it right here. We look at it. This double layer, even though it was saying it was still in negative. This one suggests it was in positive, right? Which also suggests it was a double negative, and then this indicator actually comes with its own version of being a double negative. You can see it somewhere in here. Let's see, yeah, you see this zone right here. If I was to shut it off, no, not that one. Shut this one off. See that dark zone right there? That's like an oversold zone within an oversold zone. So if I layer it again on top, and then you get this wave down, then that would be a triple oversold zone within an oversold zone, right? Within institutional buy zone, within a oversold zone. So that's the way I like to compound my data. I like to compound it like that since I'm technically the bottom and tops type of guy. It's harder to find tops. So everyone knows why we buy a stock because we're going to make money off it, right? But why we sell a stock is because of multiple different reasons. Either you need the money, you want to buy a new house, maybe that was your intrinsic value, maybe you're falling in debt, bills, you lost your job, the world's coming to an end, you know. But we all buy a stock for the same reason. So that's the reason why bottoms are more easier to find the tops. So yeah. So anyways, right here it was saying that this was a good buying opportunity right there. It's a triple whammy, right, with the divergence. And then it said it was going green from this point on, right? So it looks like it's fading, but it hasn't faded yet. The oscillator's turned over right here. We had an overbought condition, right? we look at the candlesticks, now this is contrarian candlesticks that are on the subgraph. What you want to do is wait for them to turn cold blue, right? And then buy in that area because that's where it's going to be at a bottoming like zone. How it has it right here is cold blue, right? 9%. It's going to say there's a top 75%, 80%, which happened here and here. And I also have Elliott wave theory on this one. Um, so on Elliott wave theory, on the daily chart, it suggested wave one was from right here to here, right? And then wave two was down, wave up, 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 wave one, down, wave two. Like I said, wave three and five are typically the biggest waves in Elliott wave theory, typically. Um, but waves twos, ones, fours will all be smaller, typically. So there's wave, go here, right? This green line, wave one, wave two, wave three, wave four, wave five. And five was kind of small. Hell, it looks like four was bigger than five, but normally it doesn't happen. And then you get A, B, C correction, right? So there's A here, B there, and C is suggesting C is going to be here. So if this is true, if this is not false but true, then this is wave one. This is wave two, which means we are in wave three right now. Being in wave three is a great thing. Um, so if that's true, right, in the theory of Elliott wave, right? So that's where that's at. You can see it here. Let's kind of zoom out. One, two, three, four, five. A, B, C. One, two, and in three. If it's true. So the cold spot was here. You had an institutional bottom signal there. Now, this is another thing to look at. We have this right here, these lines. You got a fill with the blue, a fill with the red, and then a just line, no fill, with the white. Now, that's going to be short, medium, and long term. And the percentages are here. You got the short term at 0.4%. You got the medium term at 0.8%, and you got the long term at 0.2%. Anything above 0.25% is technically an uptrend. So we are trending up. Using these, and a forecast wise would suggest in here that we stay in that level. I mean, there is some oscillation within the short term one, but for the long term and the medium term, we stay in that level all the way until the end of October. At the forecast as of right now, and it adapts and it changes as time moves on, right? But so let's just hold the certain time frame more reliable, the shorter part of it, not the longer part of it, right? So I would say the very first three bars are the most reliable ones. After that, five, and then 10. And once it hits around 10 and goes past 10, it kind of gets a little foggy there. But so from what it's looking at, the next three bars is up, the next five bars is up, and the next 10 bars, there could be some consolidation. So that's that, right? Okay. The next level of interest, the next evidence that we have on the chart is going to be here. This is going to be um, just like troughs in psychoanalysis, waves, ups and downs in wave analysis. We also have this money order right here, which is going to be It's typically a lot of upward pressure being done between $3 and we'll say we'll cut it right there. $3.20 is typically more has more room to be upward pressure, and anything that's above $3.20 to around $3.80 has more room to go down. So you would say like this would be the buying opportunity, and this would be a selling opportunity, but you would say volatility would be here for the downside, and volatility would be here for the upside, right? And then these are points of control. Um, for the positive, it would be here at $3.15. For the negative, it would be $3. For the positive, on in within the negative, right, it would be at $3.60, and it would be at $3.70. The negative within the negative, with the negative within the positive, right? So that's how you would look at that. Now this hole right here would be a no volume zone for either side, which would kind of fit in this area right here at $2.50, where there was a lot of selling at the bottom. So, but it wasn't done by day traders, because you can see how the day trader indicator, the participants indicator, went white here. So there wasn't really that much going on. These were institutionals doing this, but you have to have the candlesticks with the timing, right? So just because it's down here doesn't mean it was here. This down here means here, and this this was this downward move was a lot of participants. I would say if you look at it here where it's currently at, so that would be at around $3. Day traders pretty much they weren't active within that $3 range. It was more institutional, um, you know, bag holders. At least that's the way I'm interpreting the data, right? Because when you see it with let's kind of zoom out, we see it with these hot spots here, right? This is where day traders are really participating in the move, right? And you see these cold spots with the white, they're not participating there. Then if they're not there, then who is? It's going to have to be big money, right? It would make sense. So yeah, cold zones, confirmation on like low, buy low, sell high, troughs coming in, right? High zones, right? Peaks coming in, whales selling, right? An end of a on the Elliott wave theory, an end of a wave, right? Putting all this data in together, right? And then after you get all of it, and then let's look at the weekly chart. It's kind of hard to see it on the weekly, but anything below $3.20 is where it's at for buying. And the toughest part to break is going to be the $4 range right here, where the highest count or the highest negative bar is. But the highest on the weekly, the highest, right? Pinpoint accuracy is going to be around the 380, or you can round it, right, and say it's going to be the $3.40 level, which falls into $3.50 level, um, which is this hole right here where there is no participants from the buying side coming in, but there's a lot from the selling side. So you use that, right? And let's see what this looks like. So like we got some green action going on here. There's money moving in, but we still are in an outflow cascade going. It's just weak. That's how I like to interpret it. A divergence going on here with this, with one indicator saying one thing and the other indicator saying something else, right? So I shut down. It's turning up on the hyperwave, but the overall flow is negative, right? And it's been negative. So we turn it back on. We see positive coming in here, right? And this wave actually turned up here. So once you started seeing these bars tick down like that, I probably need to get this slope to be more dynamic, right? Like a cascade. But once you start seeing that happen, you know, within a heavy sold zone, it's probably a good time to start looking for a buy zone. Vice versa for this. Look, and then you got a divergence here on the weekly. Where's it at? Right here, this divergence from here to here, right? And then it was red on the contrarian candlestick chart right here. Then you can start seeing this works. You know, like how it moves. How I was talking about the white, the red, and the blue. How it was like falling within itself here. It collapsed through the red and through the blue, right? And then eventually the red started downtrending with the blue, right? So then it collapsed inside the blue, right? Even though we had it pop up, it still wasn't strong. The price was stronger, but the action on the indicator was not stronger, right? Because it didn't break through the red, break through the blue like it did here, right? The red broke through the blue because blue's longer term, intermediate, short term. It didn't do it. So we had a higher price but a weaker amount to get there. So that in itself is a divergence, which you can see it here with this red line. This indicator shows it. And we can draw a line across here and say, well, it went higher here and it wasn't there because that's where it was at. So yeah, this stochastic was actually lower. So that is a divergence also. So my interpretation of the data that I'm looking at here is that we should have this area as support on the daily. I believe we can reach this line right here. I think that's the golden. Was it here to there? I might study a little bit more on this indicator. It's fairly new to me. Um, but every time we break one, we should be able to consider the other to be a destination point. So if we use the trend it's currently in with the Fibonacci, right? Then it's saying October, the end of October, should be a zone where we break probably 350, if not sooner, if the trend really accelerates. But right here, I do have another indicator. It's kind of like faded in the background. This is a Monte Carlo indicator, um, and it's pointing up. Right there's the high, there's the low, so it's got this upward move to it. So that's another confirmation. And on this one here, it's pointing up, but it's not as strong. But it's still pointing up, so that's good. So that's another piece of evidence, right, for an upward movement. And then on the weekly, like we're talking about the red, the blue, how it faded right here, it's breaking into an upward trend. You see right here, the long term is already starting to go into it's almost positive, while the intermediate is still negative, but the short term is definitely positive. So once we see this hit at least 0.25, then we'll have the long term, right? Suggesting that we're going to see some kind of action like this right here, right? Once it turns positive, and then to put the nail in the coffin, we'll see the intermediate follow through, break through the longer term, and then that will be confirmation. But we don't buy in confirmation. We're like institutes. We buy